And we're live. Welcome to another episode of Leadership in the World in the Age of Physical AI. And I am so privileged and happy to have Dan and Nick back for our next episode, episode number 9. Today, we're going to be talking about all things capital and capital flows that's happening now. What are the trends and what really needs to happen for physical AI to become a thing and to change world economies? So, we had an amazing session last time. Dan was just talking about physical AI and how physical AI will become a thing. But I'm keen to hear from Nick's perspective about the people side of physical AI, and Dan from a supply chain perspective. How's the world going to look like, right? Maybe we'll start with you, Dan. We're keen to know, where does the capital need to flow? Where is the capital going right now, and where does it need to go?
So, as we spoke before, a lot of what's been going on with physical AI has been still focused on like the simple versions of physical AI, which is self-driving cars and humanoid robots. I'd say that the next frontier, the next frontier is not the right word. And then the idea, we've heard about swarms and how to manage swarms using AI, etc. So the idea that we could take a step forward in making this army of self-controlling mechanisms in general, not just self-driving cars or self-controlling mechanisms, do some work which we projected to. That has been the next step. That has been what we've been seeing. That's where the money has been going. Drones have been a big investment thesis for a while. They've lost some steam in the last few months, but they haven't lost investment from the actual governmental side and the Pentagon, and a lot has happened in Korea and in China as well, investing in drones, Taiwan. So Ukraine has done an amazing job with creating drones, unfortunately because of the war. But basically, drones has been, let's say, the actual real application of
the poster child for physical AI.
There you go, poster child. That's the right term. So that's been where it's gone. But my view, as I had mentioned before, is that these kind of views of physical AI are very limited to the application, rather than looking at, we need the data sets to train AI rather than, how to apply AI. And then once we have the data sets to how to train AI, then the next step will kind of be natural to it. And one example, which I think is worth mentioning, given we're focusing on commodities in general, is that AI is expected and has been doing this, which is bringing down the cost of things, right? So you can work as a programmer, you can work the same amount of 5 different programmers by yourself if you have an AI system helping you. Same thing with design, same thing soon with lawyers, same thing with call centers. So there's this deflationary pressure which comes from the advent of AI into the LLM world, and even more so into the physical world. So what does that mean in our universe of, mining and oil, et cetera, is there are lots of projects which are limited by the fact that that commodity is not at a price which makes financial sense to invest in that project. So there are mines, and there are places to explore oil, and there are places to refine, which do not make sense because the cost is too high. Now, with physical AI, that would bring deflationary pressure into the world of mining and the world of oil exploration. And as a consequence, you would be able to do way more with way less. And if you invest into these specifics, you will bring a deflationary pressure to the whole world, which would be beneficial to the whole world. I like comparing whatever can bring commodity prices down by increasing supply. So there's many ways to increase supply, but whatever way you increase supply, you will eventually bringing more commodity into the market, you will bring the price down. And then I like comparing that to, like, say, a global central bank bringing down interest rates. So you make available more money to the market because you take it away from people having to pay for their commodities. And that brings exponential growth to the world. And we've seen that in many events where central banks have had issues with wanting to bring rates down because they're bringing the world to a halt with the high rates, but inflation has been tricky, so they can't bring rates down. And then then other organisms in the financial markets, let's say OPEC, decides to increase production, and then oil price comes down. And that becomes an easing when the central banks can't ease. Same thing happened with the revolution of, I call it the iPhone revolution, after 607 when the iPhone came out. And then from there we got Ubers, from there we got Deliveroos, and we got all these different systems that you get delivery and you get this cost,
An
sorry,
ecosystem that's been
exactly,
created.
the next system is bring costs down. And then you don't know why inflation isn't going up, even though money is being pumped into the system. But the reason why is this new technological revolution has brought prices down by increasing supply in a different manner than you used to. And every technological revolution does this. And AI is one which will do this. You just can't predict it. So, but we know that we can use it for mining and oil. We just haven't, and no one's invested money into it. Once it does, its commodities are so at the base of the world's economy that it trickles down is not the right word, it trickles off. But basically it brings deflation to the whole world in a way. And that's very beneficial to the world. So I see that should be the place that we go from here. And that is definitely a place that absolutely no one is talking.
I mean, that's an amazing point because just before we get to Nick, a couple of thoughts, right? You look at the actual sensor side or the technology side, and in the early 2000s, all the talk was about NEMS, nano electromechanical sensors. And it was like, that's going to change the world. It did and it didn't, because the only company in the world that managed to get NEMS nailed down properly, I mean, arguably, was Apple. And obviously Samsung's kind of done the same thing, but no one else has been able to do anything with NEMS. And a lot of what we see today, the iPhone is a product of NEMS. And obviously, that's created an ecosystem. The whole mobile revolution has created an ecosystem, but that's it. We've never brought that into mining. We never brought that into energy. And so now we are at the cusp of a new revolution, which requires both mining and energy. And where are the sensors for that? Where are the sensors for the critical supply, right? And even you look at commodity flows, we've ended up with peaks and troughs and a resource cycle that's so scary that investors just tend to stay out of it, which is why a resource stock, for example, say lithium's gone through, peaks and troughs, although we expect a major revolution. So my point is that, I mean, if you are a supplier, great, good. But if you're anywhere in the middle of the supply chain, you get crushed. And that's been the history, that's been learned experience, right? So with respect to that, right, unless you have a lithium mine, will you survive, right? That's a question for you, Dan. Yeah.
Jesus Christ.
I don't want to put Nick through that.
Look, I've seen this story you mentioned. I mean, lithium is a newer story because the demand has increased exponentially with
More
EV
relevant today. Yeah.
with smartphones, etc. But I mean, I've seen this story on and on again. If one, reading economic history books, and two, just by following the market with gold and with copper and with all these other metals, where basically for some reason or another, the cost of extracting is above right now the price of the metal because of some speculation, or because of central bank buying gold, or because China has hoarded all the copper, or because whatever's gone on, or because of some tax which has been imposed, or some whatever which changes the price of LME copper versus COMEX copper. Anything that can happen that suddenly puts a bunch of these mining companies in a tricky situation where the cost of mining is way too high. And oil affects that radically as well, because a lot of these mines are very far away from many of the traditional energy centers. So basically they have to use diesel or whatever for power. And as a consequence, they are very affected by the price of oil. So sometimes these things get out of hand and you don't survive. Right? These junior mining companies very rarely go bust. The US government has been decent in trying to help with that in the past few decades, I say. But that means that we're subsidizing something which is extremely necessary for humanity in general, which is, commodities. So the step of bringing deflation to the price of mining is beneficiary to everyone, which I think is where you're going with your question. But basically, yeah, I've seen this happen. You don't survive. The number of companies that don't survive and just get bought out by some large company like Rio Tinto or Valley or whatever. And then the mine is just shut there, bought the price below cost, just hold it there until the price of that commodity goes above, and then it makes sense to start mining it again. But until then, it's just there. That happens very often.
Yeah, but the funny thing is that sort of that level of industry is similar to the laundromat model, right? You will make money, but it's the same as buying a laundromat in a strip mall. So so I suppose the question is that we had one sector of the economy that we knew could hyperscale, and that was software, and AI has just killed that field. So how do you hyperscale would be the question that everyone would be asking for, right? And this is kind of where only when you have a position to hyperscale is where you start seeing huge returns, right? So you're saying 10x, 100x, 1000x returns, right? And with manufacturing, with commodity, with resource, there's organic growth. There's no, hey, today I was at, today I was at $1 million. Tomorrow I'm not going to be at 20 million, tomorrow I might be at 1.2, and then that will gradually grow. That can go to, say, so one of the mines we've invested in has potentially worth $250 billion worth of, I won't go into details, but worth of resource. And so tomorrow the price of that particular commodity could be twice, and it could potentially go up to 500 billion. But that's a 10, 20-year cycle. That's not tomorrow it's going to be, 10x, 100x growth, right? And I think this is what everybody wants to, that as a founder and other founders within our group, the CEOs there, they want to hear what should we be focusing on, right?
Right. Right.
Well,
That's
one is just proving the principle that it can happen. And I think today you've mentioned a lot going on first principles. I think you're taking the right approach there. But yeah, I think the debate is you have, obviously AI has solved coding. And yeah, as a programmer, just as Dan said, like now just an average person can do what 5 programmers did, 5 years ago. And we have a powerful tool, but if you think what software engineering is, it's a very well-defined, atmosphere. Whereas going to the physical world, it's like, yeah, it's a jungle out there. So how are you able to really reconcile that? And so, yeah, I think it is an interesting challenge you're on, but I think people will see that the rewards of that is just a lot higher than just mastering this one skill that a small subgroup of our society actually uses.
Yeah, no, that's great. I mean, again, I know these are all very potent questions, and these are the questions that's being asked. These are the questions that's being deliberated on, and really trying to understand what are the fundamental levers, of capital movement, where we need to, what the companies need to focus on, right, in the coming years. So, because before we said, oh, you want to build a high growth business, focus on some software. That's gone.
that's gone.
That's definitely gone.
Yeah. I mean, slightly different to, I mean, maybe not. I might be wrong here, but I mean, replacing, okay, to paraphrase Musk, right? That whoever country has more robots will be more productive in the future, because the same way that LLMs are taking over
I think that's the fundamental leap, right?
yeah, the same way that LLMs are taking over basic language applications, so call centers, or having to digital secretaries or digital assistants, or the basic things which don't require creativity or discretion. The same way will be taken by robots, right? Basic things will be taken over by robotics or physical AI in general. So the next gold rush, as we've been mentioning, is going to be investing into robotics. Musk did close one of his largest factories that produces Series S or X, I don't remember. But either way, for his robots, right? So he is very keen on building an army, be it for here, be it for Mars, I'm not sure. But either way, for optimizing productivity. And that is definitely the next step. I'm not sure where we go from there as humanity, but I do know that it's unstoppable and it will happen. And I do know that, as I mentioned before, infinite money will be thrown into it. And it will be kind of a survival mode thing that you have to invest into it for it to work. And until it works and produces itself out of the debt that you've created by investing into it, you will continue investing into it. So it becomes a self-fulfilling prophecy, but it does fulfill. And that's been the truth about the US or any country which has been at the forefront of technological revolution forever. I mean, people keep saying, oh, the US has trillions of dollars in debt. Yes, but have you seen its GDP? It catches up.
Exactly.
And so it's not like the debt is going nowhere. It's going into GDP increasing. It would be a bigger issue if debt was increasing and GDP was flat. Yes, which I've seen happen in Europe and a few countries.
One of the senior guys in one of the investment groups once said that, yeah, we've got from the US, you're saying, yeah, we've $40 trillion of debt. Sure. But that's what we think in 5 years. That's what that's
Exactly.
the growth we'll see in the economy. So
Yeah.
we're not concerned.
Yeah, in that sense, it becomes self-fulfilling prophecy. And it's the same thing which we're seeing with the AI hyperscalers. It's the same thing we were seeing with the data center investment. It's like, people were complaining about NVIDIA and other companies kind of investing into themselves. And it's like, you need to do that. I'm not saying it's simple. I'm not saying that it can't go wrong. It can go wrong. And there's risks to all this. But it's like, what's the point of having an AI chip if I don't come up with an AI infrastructure and an AI model doesn't come out of it? So I have to invest into the AI infrastructure and into the AI model so that they buy my chips. It's like, oh, you're just reinvesting money. No, that's not exactly what I'm doing. I'm creating the demand so that eventually the demand will self-fulfill itself.
Creating the ecosystem, that's
Yeah.
So they say that the first time founder work focuses on the product, and that was what I did my first second. And the second one starts talking about distribution, and the third business that you start working on the ecosystem. And building a product in the first business helped me realize how important the ecosystem is. You have to build the ecosystem.
You have to build the ecosystem because people don't know that they need that or that it's useful for them until you build it for them, right? It's very similar to the advent of the iPhone. Like, did we need that? We didn't know. Did we not want buttons anymore? Like, we didn't know. But like, Jobs convinced everyone that we did. Again, not saying anything is right or wrong here. I'm just saying this is how it works. And that's been the truth for most technological revolutions, where you convince the population by actually creating the demand for it. And that's happened with AI. And I'm not as worried as many are on the increase in investment, saying, oh, we haven't seen the fruits of it yet. Yeah, but that's how it works. That's our point. Same thing. Next step will be into robotics. We're going to see money flowing into creating this army of robots, and we really don't know what they're going to be used for. We don't know if they're useful, but that's where it's going to go. So money is going to go into that.
I think you hit the nail on the head. I think that's what it's a self-propagating ecosystem, right? So the robots are going to increase productivity. Increased productivity will require more demand, and it's just a cycle it'll be the next big cycle. And kind of now the whole world's GDP is going to be reoriented around this new cycle. So, and it's coming. We can see that it's coming. So we're keen to see. And so I know we've got very little time left, but Nick, keen to see you. I mean, from a people perspective, right? We talked about training in the few episodes before. We talked about people, but let's bring the human aspect into all of this, right? In terms of investing into people and what people's role in all of this, right?
Mm-hmm. Well, one, yeah, I mean, we did talk about that last episode, a lot of AI creations, and I'm just coming back from conference in Silicon Valley, talking to a lot of what I consider leaders in the field, these AI engineers who have built things. They basically said like, oh yeah, we built these things, and now where we're at, our skills are already outdated. And it's like, we need a different type. But they said, we actually don't even know who we need right now. And they said, the people we're hiring are the problem solvers of the world, saying like, we can get you in here, we can find it, but you need to come in, problem solve. And the hope that I have is I find people find great satisfaction when they are problem solving. I think that's what we as humans are great at. And also too, I think we mentioned software engineering, the evolution of that earlier in the podcast, and you kind of see what it became. And, probably back in the day, early 2000s, there was just software engineers, but then there became all these specialties. There were front-end engineers, back-end engineers, platform engineers, DevOps, this whole like ecosystem created from it. And right now we're saying, oh, we need AI engineers. And I never got a good answer like what that is. And so we will have this whole ecosystem of people working at different layers of AI, whether it's on the physical side, whether it's on the implementation side. And so we'll see, a ton of job creation. And that's why I say you want to just catch this wave, understand the ins and outs of it, and, pick your lane. But there will be a lot of opportunity in the future.
It's so interesting because again, coming back to our division robotics, which is designed for Industry 6.0. I don't think it's a finished concept like I mentioned in the last episode, but it's amazing what's being done, right? So Industry 4.0. So let's go back to Industry 3.0. I think that's kind of where it gets interesting. You go back to Industry 3.0 and we had the same fears, right? With the first industrial revolution as well. We had the same fears we have now, the same phobias, same discussions, but Industry 3.0 happened because of the space race. And Intel specifically was, owes its creation to the space race and the problems that were solved to get a man on the moon. And that's created sensors and automation within industry. And now Industry 4.0 is more about sort of, well, they call it the cyberkinetic revolution, getting more robots, getting more intelligence, more software in. And I don't think we've fully appreciated the Industry 4.0's factor, but we've already defined Industry 5.0 and Industry 6.0. And Industry 5.0 defines the ecosystem where humans and machines work together. And Industry 6.0 is where the machines take over and lead the humans, right? So, Industry 6.0 is still very, very, very vague because, it's a vision. It's not a thing yet. Industry 5.0 is kind of where we close it at, where we're basically saying how we're trying to reconcile how man and machine are going to work together. And I think how we define how machines and humans will work together will help us define, I'm sorry to use the word again, but will define how Industry 6.0 comes about, right? And I think that is where you see an expansion in global economy, GDP, et cetera, et cetera, et cetera. And more specifically for us, like the focus that we have, the companies we're buying, the investments we're making, the software we're building, the hardware we're building, and how it all sort of comes together to increase productivity. And an industrial revolution, interestingly, is just 0.2% of GDP growth. And that creates jobs, that creates opportunities. And we think that, I really think that, I come from the Elon Musk school of thought where once we leave Earth, we say that we don't have enough people and we're going to create new skills. So it's not so much about the hard skills because I think we have a point where the AI will do a lot of that. It'll be more about the soft skills and how we problem solve, how we learn to think.
Yeah.
Without having to do some of the menial jobs that say, that we once had a layer for. So on that backdrop, I'd love to hear your closing comments before we close this. It's been an absolute pleasure to have both of you guys on. And I think it's an amazing couple of conversations.
Yeah, I mean, just to close it, I love that you brought us together. It's funny how finance and the people side, I feel like you see how they are linked and how this all comes together. I mean, I'm excited to see how this pulls out, but yeah, definitely glad to hear, Dan, your thoughts to what you've done so far and seeing the synergies here.
Yeah, human capital is something that we've rewritten the rules of human capital. So what are the new rules? I think we'll stick around and find out.
Yeah.
Episode 20 or 30, we'll cover it.
I think that we're going to meet somewhere in the middle, like you just mentioned. The new skills which will show up. How can I put this? When someone unfortunately loses a sense, be it their eyesight or be it their taste or their smell or their hearing, all the other sensors in their body become more acute. And that's not just like a relative thing, that the part of your brain which looks at that sense dies out, and there's actually more brain space for the other sensors to take over. One of the recent discoveries about why we dream, which has always been a question, is your visual part of the cortex fighting off the other senses, trying to take over that part of the cortex when you're sleeping, because they can take over because you can still hear, you can still smell, you can still taste when you're sleeping, but you can't see. So the dreaming is trying to like fight back, which I found really interesting. But basically, my point is, when humanity gives up a bunch of skills to robotics and to AI, the other skills that we have are going to show up with way more flair, with way more brilliance, which is kind of what you're saying. So human capital comes into that there, because there will be new skills or just skills that we've always had, which have been kind of dormant or just not as utilized because we've had to work, we've had to build, we've had to do things which robots will do in the future or AI will do in the future. And these other skills will just show up like intensely. That is the bull market version of what could happen in our future. There is a bear market version as well, which I'd probably not mention, but yeah.
That's for another time.
Yeah, sure.
But what a way to end. That is, I think you've hit the nail on the head. That is such an amazing way to put it. And we're very optimistic here, right? And we think the work that we're doing will help just help humanity, but obviously we've got to take off our investors as well and help give multiples in returns. But thank you so much, guys.
Thank you.
Love this discussion. Hope to be back another time. But and Have a good night, day, wherever you are, and we'll see you on the next episode.
Great.
So much.
Thank you.